Welcome, ladies and gentlemen. This is an educational video. Since we have a few new followers, it's good to summarize several basic points and to make them understand what we look at, what we see, what we trade when we trade the Forex market causality. So if you are someone who's following my work for some time, you can skip this video. There's no new content. I will just repeat like some basic information really. So let's get started. In a nutshell, I will explain some of the things we see on our charts, okay? So I will go through the different components. I go through the dumb money positions and I go through the different types of stop accumulations. So yeah, let's do those two for now. First of all, as you can see here, well, let's go through it one by one. Okay, so here's a price chart. This is time, this is price. The red bars, they represent dumb money shorties. So dumb money traders on the buy side who sell the market, who are short, they expect the market to drop. Generally speaking, this means that the price will go the opposite way. So this alone is not enough to trade, but it shows you what the bias is. So if basically we have shorties in the market, okay, entering shorts, selling the market. On the y-axis we see at which price levels those positions are accumulated, okay? These are groups of shorties. So what normally happens in a scenario like this is, the price eventually goes up against those positions because that pulls them into loss, okay? Now, if these traders would have been dumb money longies, so the green bars, then the opposite is true, okay? So if we have dumb money traders trying to buy the market, like here, trying to buy a breakout of the price to the upside, okay, so normally what happens is smart money eventually pushes the prices down. And this obviously is a loss, the drawdown of those dumb money longies, okay? So that's the first thing you need to understand. And while people are aware of stop hunting, they're not aware of this kind of position hunting. What we see is the first histogram shows the live positions. The second histogram shows the historic positions, so the ones who were in the market but now left. So that allows you to see where we still have the trader positions accumulated and where some of those left the market. Okay? Like here, look. It's Australian dollar, longies came in, boom, the price came down. You see? Longies trying to trade the breakout here, boom, smart money pushes the price against them. Good example, actually. So Australian dollar on an hour chart, right? Okay. So this is very important information because, as you may know, even if there's no position run as such going on, yeah, even if there is a target above the price and the smart money eventually wants to go there, those positions need to be priced in, as I say, okay? Even if eventually the smart money wants to push the price up. If they would just push the price up, those longies, the dumb money longies would make profit, so they can't do it. So the time and range principle applies. They need to go flat as long as possible to counter moves, hoping that those moves will thin out the longies. And eventually then they may still go for a target run, as I've shown before, given that those longies are within the dumb money tolerance. Yeah, so that's the first thing that needs to be understood. So it's not that we directly trade against any dumb money positions. That would be easy. That's not the case. They just show you where the price does not want to go, and in some cases, if there is an important target run, they will price them in, but eventually they will still go to the original target. Okay. Now the way you can use the dumb money positions depends on the setup. I've shown that before. I just here as a little footnote. So let's say we have dumb money shorties, okay, and then suddenly the dumb money switches to dumb money longies, okay, with more longy activity. This is a dumb money switch. So often in such situations we observe how, you know, the price went up, but then longies come in, so it's a dumb money switch, and it leads to an actual reversal, a change of direction. I've shown that many times. I've traded that many times. Yeah, just for you to know. All right, good. Now the next type of basic information we see are the medium-term stop accumulations. Here you see the yellow line, and here this orange line. The yellow lines above the price are stop accumulation of the dumb money shorties. The orange lines below the price are stop accumulations of the dumb money longies. Eventually, the price will go there. So these are, generally speaking, magnets for the price. But it's not that when we have an accumulation, the price will instantly go there. Again, that would be easy. Let me show you. If we just have an empty sub-accumulation of the shorties, this doesn't mean that we just trade towards it. Yeah. Because often, it's a bit more complex. Often we see that the counter stop is taken out first. Okay? So, most of the time, they will have a target level they want to take out. And they will first take the counter level. Okay? So this is the counter level. This is the target level. That's a bit big. So we most of the time see counter stop taken, then target run. Okay? 1, 2. It's like a base case. 1, then 2. Okay? Now you can imagine, so let's say we have a target level here and a counter stop here. Guess what? I can combine the two things I've shown you. Look, let's say we have shorties here. Dumb money short positions, yeah? So we have dumb money short positions. Okay. And the counter stop is close to this shorty nest, as I call it, the red nest. Yeah, we often see that this here happens. So they go slightly into the shorties, take the main target. So the dumb money longies are thinned out, which were placed in the correct direction. Okay. So these guys get taken out. Dumb money longies taken out. And then boom, dumb money shorties getting taken out. Very common. You can see that if you look across markets, there's always some variation of this going on. It's not rocket science. Or even though there are meter levels, overall, it's really not rocket science. Remember that. That's why I'm doing this here. Okay? Great. So that's the second basic aspect. Sometimes, if we are in an area where the price is quite overstretched and came a long way on the long-term charts, yeah, we see that suddenly around important levels on the long-term chart, we have long-term stops, the pink lines, okay? LTs, I call them. And these you don't see every day. And often you see they are going... They're doing a move to, in the end, take these out. Okay. Then, next to that, what you see a lot, like again here on this chart, short-term stops. You see the turquoise lines here and the blue lines here. We have seen recently how they accumulate a lot. Like right now, euro dollar, they're still below the price. Short-term stops, and they will probably even go for that. So the blue lines, dark blue below the price, they're short-term stops. The turquoise lines above the price are the short-term stops. Now, when you look, the recent video I've shown, you could see that there was an empty stop here, yeah, the target, and then on the way we had all these beautiful short-term stops. I call them bridge stops because they're on the way. In those cases, the bridge stops give an incentive to the smart money to not do too many pullbacks, as I had predicted. It was in euro dollar. Watch the video if you haven't seen it from the last days. So in that case, rather than doing too many pullbacks, boom, they take out the cloud, they do little pullbacks, and they take out the main target. I call it bridge stops. Sometimes we have pure STS runs, so pure short-term stop runs. That's often the case when there is a proper cloud, so when there's a lot of stops, like a real dense cloud that can be a target on its own. Okay, and it can have almost the same significance as an empty stop accumulation. So you will see a lot of short-term stops during the day in the major pairs. Like here now in your dollar. Actually, I can move this box. Wait, yeah. Look, right now as we speak, this is euro dollar, and we have short-term stops, and then we go down for the short-term stops. As you can imagine, the hierarchy is long-term stops, medium-term, short-term stops in terms of significance, but when it comes to occurrence frequency, most of the time we see medium-term stops, and they tend to be the most relevant ones for intraday moves. You can do quite nice trades trading just medium-term stops, especially if those stops are within the range. Okay, I call this inner range. IR. Inner range MTS. Inner range medium-term stop accumulations. That means if the price has been moving a lot in the past, okay, it went up here, it goes down, okay, and you define the price range like here. Take a different color, let me do this one. Okay, so this is the upper range of the price. This here is the lower range of the price. And then if you have a nice medium-term stop in the market, like here, which is within the range, okay, within those two bands, these tend to be nice trades, especially if you have this target and the dumb money placed correctly. In that case here, long. Then the price will go down, you see? It's a nice combination. So in a range, you got dumb money long is trying to buy a breakout to the upside, and the medium-term stop accumulation below the price. That can be a nice scalp trade. We see those quite a few. Nice trade towards the target. Okay, inner range scalps. On all the pairs you see between 1 and 5 per day, I would say. And a good number of those is tradable. Alright. So I've explained to you the different stop accumulations. I've explained to you the dumb money positions. I've explained to you a little bit the chart in that context, like inner range, outer range. And some typical occurrences move. So to finish off, let me just go a bit further than that. I've shown you in another video the three main setups, yeah, the failed reversal, the dumb money switch, the target run. I've also shown you the gaps. I can tell you, the squeezes, okay? The dumb money squeezes. I can tell you this is a most amazing tool. It has taken a long time to develop this. And this is the closest to the holy grail you can ever get. Look, squeeze against the longies. Down money longies go. You see the line going above the middle line, and look what that led to. A massive down move in the market. So if we have an ongoing squeeze against the longies, like here, look, with longies buying the market. So what does the smart money do? It sells down, taking stops, medium-term stops, short-term stops, long-term stops, like I predicted in the last days, like you see right now in front of your nose. Look, we have new longies coming in, so again they go for those short-term stops. And to finish off as a little reward, allow me to show you a really cool setup. If you have longies in the market, stops below, and then an ongoing squeeze, you can take all these entries against the squeeze. Yeah? So at each point you have those longies coming in the market, it will do another target run. Or you understand? Until the point where the squeeze collapses and there's a down money switch. So longies leave the market and shorties come in. And main targets have been taken. Then it goes up again. There will be a down money switch, potentially tradable. But until then, we want to have failed reversals down, like here now in euro dollar 1.17165. Longies around the world, buy. So the price goes down. Not up. This is not supply and demand. Remember, if this would be supply and demand, because these people buy, it should go up. No. The cartel pushes the price down, going for the stops. All right? And this year, the latest version is fantastic. Just this alone is worth subscribing, really, to be honest with you. This is a trader's dream, because you can now see when we have a trending phase and the market just goes in one direction, and when we have a consolidating phase, literally. This is alone is unthinkable. Okay, if you're a trader, you know how crazy that is. This innocent looking indicator is amazing. So you can make very good money just, in such a scenario where where longies go on one side, a squeeze starts, and you enter into the squeeze going for several runs. Okay? And it helps you, obviously. You never ever buy into a market like this, ever. This would be a sin. A sin of the causality trader. If you see the down money is long and squeeze is going on, don't even think of buying a reversal. You will lose. This alone is, again, super powerful. Alright? So, avoid that. So, in the scenario I've shown you here, okay, the price goes down. Because longies are buying. At the same time, we have a squeeze going on. This is incredible tools, guys. So at some point, okay, let's say the main target that's in empty here has been taken. Cleared it, retested the low. Then what happens? Shorties enter the market. They enter expensively in the market, okay? The price already came down. They say, you know what? There's so much momentum. Okay, it doesn't seem to go up, then I sell. It's often the ones who are buying before switching and getting whipsawed. So what happens? This leads to a collapse in the squeeze. Even potentially a new squeeze in the other direction, but doesn't have to be. So here we get those kind of setups there, like a post target run, down money switch, counter move, which can be often tradable. I've shown you many times. Alright? This is gold, ladies and gentlemen. If you want to make it a forex, this knowledge is gold. Okay. I've shown you a bit, I've shown you a bit like the failed reversals, down money switch, trades in against the in the direction basically of the squeeze. These are amazing trades. And of course we see inner range empty runs as well. We see also breakouts. I've shown that before, but you have to differentiate. Okay, let's say the price is in some kind of consolidation. Often what you see, okay, if this here is some kind of consolidation, you see that as soon as the price goes to the upper part, tries to break the high, what happens? The money longies try to buy. And this, of course, leads to a fake out. Okay? If the dumb money tried to buy the breakout, fake out. But if it's the other way around, the dumb money tries to sell back into the range and tries to do a range trade, you guessed it, the opposite happens. A real breakout. Especially if, for example, there are some empties here of the shorties, etc. Okay? Alright, to finish this off, let me show you the bit more complex scenario, which you can also see. So, we have, let's say, some kind of Grail pattern going on. And this is a bit more tricky than the other ones. Remember, so you see, let's say, a nice empty accumulation above the price here. Nice stops, okay? Maybe even a long-term stop. So you know, okay, eventually they want to clean that level. As I said before, we don't just buy towards it. Why? Because in most cases, not many cases, they retest the opposite side several times, again and again and again. However, at some point, a target run can happen. Now, let me show you again something super cool. If you look at the net dumb money squeeze indicator, and you see that, boom, the squeeze against the shorties is about to come. You can go for the target trade. A little bit advanced, but again, no rocket science. If you see the shorties are going short, you can take a trade towards the main target. Long. Okay. This is beautiful. Okay, so here in the most simple way I can imagine, I summarized some easy setups and principles. Of course, there's more advanced stuff as well. Okay, there's also little scalps and so on, but this, what I showed you, is basically the bread and butter of a causality trader. Because the scenarios repeat and repeat again. I can take any chart. Look at that. You see, we have the lows here, targets, some kind of reverse Grail patterns. Long is trying to buy a breakout up, so boom, move down towards the low. You see, the empty being taken out. This empty here at 0.75, maybe they want it. If more longies come in, you understand? It's always about that. In a nutshell. In fact, let me show you also here. So dollar yen. You see, shorties coming in, selling, 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 selling. This leads to a squeeze, dumb money squeeze. So what happens? The smart money buys and pushes the price up against those shorties. Okay. And as you can see, there's an inner range medium-term stop accumulation below the price. Yeah, there could be potentially a target. Yeah. So market overstretched, upper stops are taken. Now the inner range stop, some long is coming in. Can be tradable. In this particular case, you have to be careful because, as you can see, we have an ongoing squeeze. So beginners should really skip that one. And pros should use a stop where they will get out when they try to trade a short here in this particular scenario. You don't want to get caught up in a squeeze, as I've shown before. Okay. Fantastic. So it was a pleasure. I hope that, you know, some newer followers understand the value of what's shown here. Consider to subscribe to the live stream. Stay tuned, because soon there's going to be some big news regarding that one. Right? But I will make a separate video about that. Voila, that's as close as you can get to the Holy Grail in Forex. My work is serious. It's not about BS. Okay, it's how the market works. This is not conspiracy or anything. You see those mechanics unfolding. I've delivered the evidence for quite some time period by now. This is not imagination. I've traded this in front of your eyes. I'm not sure whoever did that. But I don't want to push my ego or anything. But and maybe, you know, like work like this, because it's reality, the truth, and it's not super simple. Maybe it will never be mainstream, you know. Maybe it will always be this little group which understands those things and which is serious about the game. But that's okay. Other channels, they make flashy videos with funky stuff, and they talk about this and that. It's all noise. It's all noise. We prefer hard analysis, hard mechanics, because that enables us to succeed despite all this market manipulation going on, despite the odds being against us, because we are able to outsmart the smart money. All right. I wish you all the best. Stay safe.